Beginning of this year 2026 that I will be documenting each and every setup, each and every trade that I happen to execute. For me to sit down in future and sit down and watch my videos, get to go through my mind, get to go through them so that at least I can get to understand what was actually going through my mind when I was executing this trade. Now, today's on Monday, 12th of January, Monday 12th of January, it's the beginning of this week. 2026, and I just executed a buy on Eurgbp, and I'm gonna be explaining the reason why I'm executing these buys. And this kind of a trade is not actually my A setup. It's actually violating some few rules, and I think it's because of what we call fear of missing out, and also psychologically I'm getting messed up. But let's see how it plays out. Yes, now here's the thing. First of all, let me just explain, break it down, the reason why I'm executing those buys. Number one, I said that when it comes to my trading system is divided into two. We start with the fundamentals. The fundamentals are divided into two. Then we still have technical analysis, which is also divided into two. Now, the fundamental thing is that we are supposed to be looking at the buyers. The fundamentals are supposed to give us the buyers. Then the technical analysis is now supposed to tell us where probably the price may start moving from and the entry. Now, the breakdown of this trade is quite simple. Let's go first of all. The first thing we are going to cover the fundamental analysis on the euro. It's quite simple. If you have not watched the weekly forecast, which I did, you can consider going and watch. First of all, we are going to get into euro area. The euro area, what we're looking for, the first thing that we look at, remember, is what we call the GDP. The GDP. So we are going to check on the GDP, of course. The GDP, we can see that the Eurozone growth for the third quarter of 2025 was revised. Here's the thing. Kind of slow. Okay, let me just, yes, there we go. Eurozone, this is where I'm reading. So you can see very well what I'm actually reading. Eurozone GDP growth of the third quarter of 2025 was revised slightly higher or to this one. Now you can read all that, but most of the time, for the quick to be very quick, I just look at the bar. You can see very well that the GDP is actually rising, whereby we were at 0.1%. Now currently we are at 0.3%, which is also an increase, which is an increment showing that the Eurozone, it's actually in a good condition. Now, the second thing that we are going to look at is what we call the inflation. The second thing that we are going to look at is actually the inflation. Let me just go and check on the inflation rate. So we are going to check on the inflation rate, and you can tell very simple that in the inflation is actually within the 2%. Now it is a drop from 2.1% to 2%, which is actually a drop. Now remember this, inflation is actually falling in the Eurozone, but the 2% whereby the inflation is currently in or at is the European Central Bank inflation target. Therefore, that means that the inflation is actually within the target, is under control, and that now gives me a very good vibe that GDP or the growth that is now the economy is growing and inflation is under control, and that now tells me that actually euro is in a very good condition. Now the last thing we can check, we can just go to the labor sector. Then you can just come and look at what we call unemployment rate. Unemployment rate. When you check on the unemployment rate on the euro, you can tell very well that the unemployment is actually falling, whereby the inflation, the unemployment rate was actually under stagnation at 6.40, and currently is whereby we had a slight drop to 6.3%, which is actually showing that the unemployment rate is actually falling, which is also giving us a very good vibe for the euro. Now, something else you can consider is what we call the interest rates. There's what we call in the you can just consider unemployment interest rates for the last thing comparison. Now look at this, what I'm doing. This is something else people don't tend to be told, but this is actually what we are doing. Currently, you can see that the interest rate is currently at 2.1%, right? yeah, you can tell very well that the ECB, which is now the European Central Bank, left borrowing costs unchanged for the fourth consecutive meeting in December 2025, while the main refinancing rate remained at 2.15%, which shows if the interest rate is actually at 2.1%, which is higher than the inflation, is actually good condition, because you don't go for the country which the inflation is higher than the interest rates. That shows that the country is not in good condition, and therefore euro, that one now tells me that we actually are bullish for the euro. Now, that is now the euro. The next thing that we want to cover is on the United Kingdom, so that at least we get to understand how the economy is performing, and why we should be looking for buys on euro and sell GBP. Now, for this, we are going for the United Kingdom. Of course, I will go there. The first thing you want to go is, of course, we want to go and consider what you call we are going to consider what we call the GDP growth. Actually, if you check on the GDP on the United Kingdom, it is quite very simple. You can tell that actually the economy is not actually performing very well, whereby we had a drop from 0.2% to 0.1%, which shows a decline. Once you understand that the economy is declining, the second thing that you want to go and consider is what we call the inflation rate. Just click on the inflation rate if you want to know where I'm getting all this data. It's this amazing website called Trading Economics. It's quite simple. If you're a person who really consider fundamentals, then you can consider using Trading Economics. Now, the second thing you want to consider is actually the inflation. You can tell very well that the inflation right now is at 3%. Look, yes, the inflation is actually dropping, whereby the inflation dropped from the previous data, that is the previous value, which was 3.6% to 3.2%. And therefore, this tells you that actually the inflation is dropping. But the drop in the inflation doesn't mean that it is healthy for the economy. Actually, what you're supposed to be considering is that the inflation right now is at 3.2%, which is actually way higher than the Bank of England inflation target. The Bank of England inflation target is always at 2%, and that now tells you that actually United Kingdom is not that far in good condition right now. The second thing that you want to go and consider is actually something else we call the unemployment rate. Then you can go to unemployment rate. Check on the unemployment rate at where is the labor sector on the United Kingdom. Where is it? You can tell very, very well that actually the unemployment rate has been increasing in the United Kingdom, and this is not favorable. This is not healthy for the economy, especially when there is a high rate of unemployment. So you should consider into that. Now, the other thing that you want to call, like using the three, you can just come up with the buyers and see that they actually what you call the United Kingdom is not in very good condition. The last thing I want to do is just go and what we call just go to the interest rates. Interest rates, you are going to do the comparison between the interest rates and the inflation. You can tell the actual reading by reading these, you can tell that the Bank of England cut the bank rate by 25 basis points to 3.75%. Now, let's go and consider it is 3.75. 7.5. Let me just go and consider the inflation now, the comparison between. So I'm looking at the inflation right at 3.2%. Actually, the interest rate is way higher compared to what? The interest rate is higher compared to the inflation, which is also something good, but the inflation is way higher than the Bank of England inflation target, and therefore tells me that United Kingdom is not actually good for that. Now, once you are done with that, we can tell very well that basically when you're looking for the buyers, euro is more stronger, or is way kind of doing better compared to the United Kingdom, that is now the sterling pound. Now, once you understand that, now you have the buyers. Euro is doing better than compared to doing better than compared to sterling pound. The next thing that you want to do is do the second part of the fundamental analysis, and this one you apply the rule whereby we say that we should be looking forward to what actually the market is obsessed with. sometimes you might find that it's actually simple that you buy the currency with a high interest rates, then sell the currency with the with the the lower interest rates. Unfortunately, when it comes to this, most of the time we find out that the prices are not actually playing into our favor. It's not because you are wrong. It's sometimes you need to understand that you need to understand what is currently what the market is obsessed currently. Now, by this one, I use the rule that the market tends to be obsessed with the interest rates. I trade from the idea that the forex market prices do not actually move randomly. They actually move due to what you call under what you call the interest rates influence. So the interest rates are the heartbeat of forex market, and therefore, once you understand that, the second thing you gotta know is what we call the obsession. So the obsession is quite simple. You just wanna understand. For the United Kingdom, let's see how long we have, how many days do we have to the interest rates. The United Kingdom is around here. You can see it will be on the same day. So we still have 23 days to the United Kingdom interest rates decision. And then on the euro, it's following, whereby we still have 24 days to the interest rates. That tells you that the market currently is not obsessed. Yeah, is not currently obsessed with what you call it's not obsessed with the interest rates expectation. And that, having that in mind, it's quite simple. You just need to understand. Now, the other thing that you can consider before taking that trade, it's actually looking at what you call it's to consider what you call the week ahead. If you don't know how to find the week ahead information, you can just join my Telegram channel. This is a free channel. I don't get to ask for payment. Actually, I send each and every update on here. Now you can tell very well on this week what you're actually looking at. Week ahead. This is my actually this is now the Telegram. It's just free of charge. You just get there. Now let's read week ahead. The second full week of the year brings. Let me just highlight. You can see now the second full week of the year brings a busy economic calendar, highlighted by major data releases across the economies and the kickoff of earnings season of the leading U.S. banks. In the U.S., attention will be on inflation data closely watched as persistent price pressures continue to fuel division within the Federal Reserve. Additional releases includes retail sales of producer prices, housing data, and trade figures. But when we are not paying much attention to what is actually happening on the US, we are actually paying much attention to what is happening in the economy of Europe and what you call United Kingdom. And for that, we have the second paragraph, which says European will also be in focus with the GDP updates from Germany and the UK, alongside Eurozone, industrial production and trade balance data. In China, upcoming on all that. Now we are getting to China, but now it tells you that mostly the trade or the market will be obsessed with the GDP, which is now the economy performance, how we are doing the performance and how it is performing. And we have already seen that it's actually doing very well in the Eurozone, but doing poorly, and also doing poorly in in the United Kingdom. Now, once you understand that, it's quite simple. Now we go into our technical analysis. We've already seen, you can just go to the Forex Factory. Today's on Monday. We don't have any other data, which is coming out very soon related to these two pairs. And therefore, you can consider on Tuesday, we still don't have major data which will be playing out related to the England, or that is now Eurozone and United Kingdom. The data will be playing very well, or maybe we will be waiting for what? Actually, even on Wednesday, we shall not be having much data to pay much attention to, and that now gives me a very good room for us to execute a trade as we are waiting, as we do it. Now, the second thing is that to cover the technical analysis, remember we start from the daily the daily time frame. For the people who have been taking through the trading coach, quite very simple. They really understand. I go by the name of Kelvin, and I'm a currency trader and a trading coach at a RatePulse market. Now, on the daily time frame, this is actually what the market. This is how the price is actually looking like. on the candlesticks. Now this is how the chart is looking like. The first thing that we are supposed to be looking at is what we call the break of structures. Any break of structures, you can tell very well that we had this break of structure. Actually, this is not the first time I'm executing these buys. It's only that I had not started recording these videos. So here is the break of structure to the upside. This is now the technical analysis. Now we want to get the point of interest before executing the trade. Now this is now the break of structure. We have imbalance here, over here. We have imbalance over there, and then also we have some level to pay much attention to this. Now, and this one now tells you very well we might be having a demand zone into that zone. So you can just highlight it, that zone, all of it up to that position, into that position. Now, once you understand that, you can come before. You see now, whereby we have this break of structure, you can tell very well that the market was actually in a very good range into this zone. The market was in a very good range into that, whereby this one is, I just give it as accumulation. I call it as accumulation. Now, on this one, this is something you need to pay much attention to. Remember, we are marking the point of interest whereby the price is likely to react from. Now, on this accumulation, we need to buy, or we need to look at what we call premium and discount level. If you check very well on this accumulation, we can tell very well that the half of these, you can see the black dotted line in between, and therefore this tells you we have a very quite demand zone below here. So you can pay much attention to this zone of the accumulation zone. That is now the thing. Now there's something else you need to understand. What type of a demand are you trading? There's what we call two types of demand, or two types of demand or supply, whereby we have range and pivot. So you need to understand what demand zone, what kind of a demand zone or supply will you be trading. Now, for this one, remember what we're looking for on the day on the demand zone or supply zone. We are looking for something like this. Go for the liquidity, then giving us change of a character, then we can get to enter from that position, going to the upside. Remember, this is what you call the CPR. That is now capture, pain, then relief, and then we go to the upside. Therefore, you need to pay much attention to that. Now, if you don't get to master, or maybe you cannot be in a position to identify it quite simple, just have the line graph, and then you can tell that on this zone, on the daily time frame, we had a very good liquidity sweep. Into this direction, whereby it was that. Therefore, this now gives a very good range demand zone. And therefore, once you understand that, something else you need to understand, you can filter it using the daily time frame. Then on the line graph, there's something else you need you to pay much attention. Remember, on this, from all the way from above here to this position, it was a range. And then when this demand zone pushed to break to this upside, this zone never got into 50%. And if it never got into 50%, there's a high probability it's a liquidity, what we call the internal range liquidity. You need to pay much attention to that. Now, having said that, you can now proceed to, now we've already marked the demand zone on the daily time frame. Remember, once you get the demand zone, you need to go to one time frame lower for you to identify or to do what we call the filtering. So you need to filter. So the moment you go into that, let me just go down on the 15-minute on the forward time frame, then get to filter. Then on this, while we are trying to filter, you just come up with the different you just need to understand that here you're not looking for the demand zone out of this zone, like from this zone. Therefore, the zones that you should be paying much attention to is this one, and this one on this zone. So from this zone, you can tell very well if you were to go in the forward time frame, in the 4-hour time frame. Now we are looking for what? Break of structure, imbalances. Remember that break of structure. You can tell very well that here we had a very good break of structure. We had this break of structure to the upside. This is now, remember, we want to filter so that at least we can have precise price to a point of interest. Now we have this break of structure, and that now was led by this demand zone here, by that demand zone over here. We are looking at that range. We are looking at that range. And also, we have another break of structure within that zone. I want you to go and do it once and for all. We still have this demand zone. We still now have another demand zone. So if you pay much attention to, you'll come to realize that we have another demand zone from this point, whereby, let me just mark it, instead of extending that into that way, let me just have it as a demand zone, So this is now the demand zone. And also we have now this break of structure. You gonna know how to play, like to mark them correctly. Yes, into that. Now if we were to pay much attention, you'll come to realize that all these are demand zone. And for that matter, you can just decide to work with the general 3 of them, all the way down there, then all the way up. Let me just have it. Yes. Now you are supposed to work with the 3 demand. Remember, you don't have the precise point whereby you might say that the price is actually supposed to be reacting, but you'll be paying much attention to this zone, and that's now gives you a very key point of interest, a very good key point of interest. If you go into the daily time frame, you will come to realize that it is actually well marked as a demand zone like that. But now there's something else you need to understand. The price being at this point of interest is not a guarantee that the price will actually push to the upside. It's not a guarantee that the price will actually push to the upside. No, you might see the price being here and still continue to the downside, and therefore that is now the time you apply the entry model. The entry model is quite simple. It is quite simple. Why did I execute the buys on this trade? The first thing is that when I was looking at this trade, remember this this move to the downside, this push to the upside, it was due to what you call UK housing data, which came out quite stronger for the GBP, and then sterling pound had to push up to this kind of a demand zone. Remember, when I'm just getting to the execution, before I executed this one, remember I'm still holding one trade position. I entered here. Let me just explain how I got into that. If you remember very well, on my entry model, it's quite simple. What I'm looking at is what we call something like this: liquidity sweep, then a change of character, then what we call that is now the something for the entry, then boom, push to the upside. This is the setup I'm looking for. And if you check on the very well, after getting into this point of interest, this is actually what the price played out. The price pushed to the downside, created this kind of a push to the upside, then dropped it down, went for that liquidity, then gave us a very good change of character. Then I executed my buys all the way from here. Then we've been pushing up to that position. If you're not able to see that kind of a setup, it's quite simple. Just have your line graph, and you'll actually see it, even though it's not that actually straightforward. You can see we have this kind of almost relative equal highs, and you can see very well what I was looking at: push to the downside, a reversal, a run for the liquidity, then push to the upside, then boom, then I executed my buys. Therefore, I just executed my first buys from this rejection, long position. I just executed from this. I'm gonna, like, after this liquidity, remember most of the time I mark what we call breaker blocks. Then my stop loss was of course around 50 pips, which I just found that it was actually being accommodated into this pair. Actually, I just went with the 30, which is also within the range of that point of interest, and I've been holding that trade to the upside, and I want to see how this price will actually be pushing to the upside. Now, today being on Monday, after closing those partials, today on Monday, I just found myself kinda executed another trade. This is the reason why I'm doing this now, this video. Why did I execute another buy? This is the thing. When you look on the 4-hour time frame, this is whereby I was saying that this is not my A setup because it is actually violating most of my rules. Now here when you check on the 4-hour time frame, we don't have any break of structure. We don't have any break of structure on this zone. Actually the price is actually in a kind of consolidation or accumulation. The market is actually in this kind of accumulation. Is actually in the accumulation phase. If you turn, there's no break of structure, there's no imbalance to the push to the upside. But I just executed a buy. Why did I execute the buy? I think I have fear of missing out, and again overconfidence, I would say. The thing with number one is very simple. If you check very well on this price action, on this accumulation phase, you can tell that we are actually in the discount. We are actually in the discount level. This again, before into that accumulation, yeah, you can see that we had a very good liquidity sweep to the downside. We had this sweep to the upside, this to the upside. This is supposed to be a sweep. Let me just mark it as a sweep, then just go to settings. I want to write it, then text. I want to sweep. I want to have it as a sweep. All right, sweep. So then I'm gonna mark it with the red. I'm gonna have the line as red, then I'm gonna have it dotted. Allow me to have it dotted. Do you have dotted? All right, being let me just have it to avoid the video being long. So I'll just have it as my sweep. Now after this sweep execution, after the sweep here, we went again having this kind of a break of structure. It's not that much straightforward. So this one we have a break of structure to the upside. So we have a break of structure to the upside, and therefore that being a very good stuff. So that's the reason why I executed that kind of buys into that stuff. So that's why the reason why I took that buy. So I can say that we're looking at this level. We have this level, which is also my demand zone. I'll just go and mark it as my demand zone. Remember, this is not my A setup. It's not actually that straightforward, but I just executed. And then my stop loss, where will be my stop loss being? I just executed a buys from that point, and I'm risking about 10 pips. Yes, I'm setting my stop loss around there. It is, yes, it is quite tight, yes, but that's where I'm kinda having my stop loss. Then we are going to have if I was to draw some kind of what you call chart patterns, it is quite simple. Maybe you can connect for the trend line. Let me just have everything what I was considering. That was now the point whereby you can see now. So that is now whereby we are marking control. Then we can have our zones marked as that into that. So this is why I'm executing the first trade, or the second I'm executing more buys onto Eurgbp. I've been watching it since I woke up in the morning. And where will I be? My target be on the daily high time frame. Not actually like I'll be targeting all these highs, all-time highs on the daily. Remember, this demand is coming from the daily time frame, and therefore we might see the price actually pushing into that zone. Up to that position is where we should be having our take profit number one. Let me just have it dotted. That's how I mark my take profits. Take profit number one, that way. So this is where I'm actually having my take profits. It is that simple. That's where I'm having my take profits. So we are just gonna wait and see how the price actually plays out. Let's see how the price actually plays out. We are going to continue into that direction. Then how do I feel in terms of emotional towards this trade? Actually, we are looking forward to having what we call the GDP for the United Kingdom, which will be coming this week actually, but it is not today, it is not tomorrow, and therefore I think we still have some room for that for us. Let me see when we shall be having. You can see we shall be having on Thursday. Today being on Monday, we still have more time for that price actually to play out. So we can still see some push to the upside before getting to what you call a GDP for the United Kingdom, which is actually monthly. So we're going to wait and see. Let's see how the price actually plays out. I go by the name of Kelvin. I'm a currency trader. I said all this I'm doing is to document my life in terms of trading, all the trades that I'll be executing 2026, and actually more of this content will be coming out. For the people who are interested in this kind of a content, you can consider commenting and also like, share, and also you can consider subscribing for more videos. Will be dropping each and every trade. I don't want to execute a trade then fail to record this video, then I can see you, like we can call it a day. Let's go on Monday. See you, champ. Let's wait and see how that trade plays out. See you next time, man. God bless.